Yes, welcome guys to another video. In this video, I'm gonna give you a strategy that can pass your prop firm challenge in just a single trade, risking only 1% or less. Literally, this can give you 1 to 5R, 1 to 6R, 1 to 10R in just a single trade. And it is so simple like ABC, and also you can use an indicator as well. So this is a dealing range type of strategy, and it's original from Dr. Dr. So I'm not the author of this, but I have some entry models that I've compiled ICT concepts with, and so on. So this is how it works. First of all, I want you to acknowledge that I'm using UTC plus 3. So whatever you see in here, or for example, the timestamps I'm going to be using are going to be based on UTC plus 3. So you can also change from your from your charts what time zone would you like to use, but I'd prefer you use UTC plus 3 for now so that you can be at the same page. Okay, because if you're using UTC maybe minus -4 or UTC plus 9 or like another time zone, it's gonna be different. So for us to be on the same page, please take it to UTC plus 3. So let's begin. The dealing range, or the strategy, you mark the timestamp between 11 to 12 p.m. 11 to 12 p.m. UTC plus 3, remember. So 11 to 12 p.m. is literally 1 hour dealing range, whereby we wait for it to give us a bias, a session bias. Then after we confirm the bias through displacement, we come back again to tap in for entry, and we get our entry using liquidity points. For example, we wait for a swing low to be taken because there's money resting here, the way this one did here. Then it goes to delivery, and we target something above. For example, we target this high here. Okay, and that will see that was 1 to around 1 to 7. So let me show you what really happened here. I've said we are marking from 11 to 12. So from 11 to 12, we're going to be highlighting the lows and highs of the bodies only, candle bodies, not the wicks. I repeat again. From 11 to 12, we're going to be marking the low of the bodies within that range and the highs of the bodies of the candles within that range only. We don't mark the candle, we don't mark the wicks, only the bodies. And for people who don't know, there's an indicator here. Just go to your indicator panel and search for DRIDR. Okay. Uh, I prefer to use the IDR, the internal dealing range. The DR itself or external dealing range is not important. Forget about these weeks. Just keep it simple as this. So as you can see, and remember, always use 15 minutes because 15 minutes is it's way more clearer. When you go to 5 minutes, you're gonna find a lot of, or maybe 3 minutes or 1 minute, you're gonna find a lot of noise. So I prefer 15 minutes for IDR displacement. Then now we can now switch into 5 minutes or maybe 1 minute seeking for entry from the PDRS within the dealing range. Okay. So for example, after we have marked the high of this range of 11 to 12, that's the high of the body, okay, of the bodies within that range. That was the highest closure of the bodies, okay. We also have this was the lowest. So we wait for price to close either above or below it. In this scenario, price closed above it at 1430. Remember, I'm using UTC plus 3 as 1430. So once it closed at 1430, we ask ourselves, has the target been met? This is our primary target here. No, we only, because if it closes above and goes straight and take the target, then meaning that you've already missed the trade. So you just let it go. When you come back here trying to force it and already it has already been delivered to the buy side liquidity, then it's just a waste of time and money. Okay. So you have to take a look at where are we targeting. You must have a valid target. We have a valid target right here. This money resting here, this liquidity, these are buy side liquidity. There was a time I talked about liquidity, and I told you guys about this buy side, sell side. So if you haven't checked the video, just go go look at it in the videos within this channel. It's something to do with introduction to liquidity. So we have buy side right here. Okay, let us now go into 15 minutes time frame and see what price was really up to or what was happening for entry. Uh-huh. There we go. So first of all, let me remove this indicator so maybe you don't see a lot of lines. Okay, so this was our range. Let me mark it. It was from 11 to 12. Okay, so this is the dealing range. Okay, so w- we mark, and as you can see, 5 minutes it's a little bit chaotic because see 5 minutes is giving us that dealing range supposed to be up here, but you see on 15 minutes it's saying otherwise. So I don't like using 5 minutes because it's more chaotic. Sometimes it can really lead you astray. So once you mark this range, we now wait for price to do what? To come in to fill either an imbalance, which is where this bullish 15 minutes, I mean 5 minutes fair value gap, this one here, this imbalance. Then we buy from it, targeting the opposing what? Buy side liquidity. And that's exactly what happened here. You see, after closing above, which happened, let me first delete this one. After closing above, confirming that we are going higher, price came back in, and when it came back in, we took this swing low because this is the only liquidity point we could see within this area after displacing above. Okay, and we took it and went higher to deliver. Let me go back into 15 minutes and give you another example. That is first trade one, and that was 1 to around 1 to 7 R. Let us go to the next one. The next one, let me delete this one so that it doesn't really confuse us. So the next one is gonna be from 1730 to 1830. It is a hourly time interval dealing range. So let us see. I've activated the indicator again so as to give us easy time and easy work. So that was one. Okay. The next session of London, that is, we're gonna begin from 1730 to 1830. Okay. So what do we do again? We just mark the low and the high of the bodies within that range. Not the high and low of the wicks. Remember this again, not the wicks. We're using the bodies. Okay? We're using the internal dealing range, which we use the bodies. That is the highest body in this range, and this is the lowest body in this range. Remember, I'm using 5 minutes because 5 minutes is more clearer. Then we wait for price to do what? Give us displacement either above or below. So we had displacement here, it was above, showing us we are interested in going higher. Going higher, the first question we're going to ask ourselves, where are we going to? Do we have something to target up here? Yes, this was our primary target. We had this one here. Above it, we also had this one here. So these are buy side liquidity priced in above here. So that price had to take. So let us see if we had entry in this. How are we supposed to? And remember, I told you after we have had that displacement of confirmation of bias, we now look for swing lows, fair value gaps within the range, or just some liquidity point that has to be taken for us to go higher. Okay, and in this scenario, we had this one here, which was actually the external dealing range liquidity. and price came and took it. This was quite late, and this is not high probability type of trade. You see this type of trades, they're not really high probability, because you see, when you take a look at the time, price is coming to give us entry at 23 p.m., and this is close to market close. This is like 1 hour to market close. So 1 hour to market close, you don't expect within 1 hour for price to to deliver all this. Like it's so late. Okay, so this high low probability, but still it worked. So we come and put our entry just there. We can risk. We can put our stop loss just below this one here, this low here, this one here, or even this one. Yeah, I don't expect it to be taken. This one, and or for some people they'll put their stop loss here just to be safe. You know. Then what do they do? We now target these highs here, and that was delivered the next day. Okay, but for a more optimal entry, you put your stop loss right there so that you can get at least 1 to 3 hour, which was delivered. You just put your buy limit below here and target this buy side liquidity, and boom, you have it, 1 to 3 hour. This was the same day. But now this time interval is not really such a good idea into looking for trades. If that's not enough, let's go to another day. Let's see. Let us backtest this more so that you can see that it works and you can literally pass or make a lot of money. Let us go to the next day. That is now on Tuesday 10th. The same thing. I want to take a look here. We mark the low and the highest of the bodies. Then we wait for displacement. Displacement confirmed bullish. After it confirmed the bullish, we wait for price to retrace back into that range. Then we buy. So for example, we had a 15 minute. There was a fair value gap here. Yeah, there was a fair value gap here. So we would wait for price to tap in. Our stop is going to be below here. Then, and this seems like to be something to do with the news, I think. This kind of drop here. And let me give you a secret. For more sweet or more optimal entries, ensure that you're always buying below the equilibrium of the dealing range. You see, this is the equilibrium here. And as you can see, price came below it. So when you buy below here, it's way better. So you're buying at the discount of that dealing range, not at the premium. Because when we bought it at this fair value gap here, that okay, we're on the right dimension, but we are buying it at um, a premium level. So the best thing is you wait for price to come at the discount level here. And as you can see, for for people who don't want a lot of task and so on. So in this scenario, we had this gap here. So this gap was supposed to protect us. This bullish gap here is in here, this 15 minute, this tiny one. This one is supposed to protect us from price attacking this sell-side liquidity. So when our stop loss is here, we're safe. That's why you see even when the news came in, it only dropped but never violated this one. And maybe if you move into 5 minutes, maybe we'll find a more optimal trade entry. And I will also give another entry model using this one, using this strategy, using the ICT fib retracement levels. Okay, when you go to 5 minutes, this is what we get here. Um, Price just came low, took this little swing here, and reversed from it. So alternatively, you would have just maybe put your longs at the mid there because you want to buy either at the equilibrium or at the discount level, and we sell at the premium level. I've talked about these terms in other videos, and our target was this one here. So we buy there. Where do we target? Up here, which was met the same day. Okay, that's 1 to 3 again. Easy as ABC. This one was one, this one was one, this one was one, and even take a look at the next one. You'll see it was one as well. Let me show you. So the next session that is on, and this will be the last one. Then maybe you can now go back test it for yourself and see if it works for you. Now you can see here we do the same thing from 1730 to 1830. We mark the high and low, and as you can see in this scenario we had this was news, and you see news was trying to lead people astray, thinking that now we are supposed to be going lower. But when you had in mind that we never had entry during the London DR, showing that price had to come down, manipulate, and give us entry here, and we still have these targets not yet filled, don't even think about selling. Know that this is just some kind of setup. Okay, and given that this was news, don't even think about it. As much as this liquidity is still resting here, okay, as much as the London liquidity has not been delivered, don't even think about shorting it. So this only tap down to give us that entry of London, and as you can see, price went ahead to close above that link. Now this is the correct one. Now what do we have here? We had a fair value gap here. We had a fair value gap here, a 15-minute fair value gap. Okay. So once we had confirmed the bullish move and this bullish move, we still have a valid liquidity, buy side liquidity to take. Okay, this one here. So what happens right here is that we wait for price to come into this gap. We put our entry. We ensure that our entry is below the equilibrium of this dealing range, which is this midpoint. Okay, it should be always below it to give us good entries. And our stop loss, for example, right there, our stop loss was supposed to be, because this single is not supposed to be, but this is so far away. This one is so far away. So what you can do, we use what's next to it. This one here. Okay, as much as the price really went close to it, but it was never violated. This one here. I'm using this one here because it also matters. I'm not going to go into details into this so much, but it matters. Okay, as you can see, price really respected. Putting your stop loss down here is just too. It's just too huge, you know. And you target this high. That's 1 to 2 hour, and easy in very short period of time. You tap in, you go up there. Okay, and you can do this always. Just follow the simple rules. There, it is there always, guys. It is like literally there. Even this one other day. This is now Wednesday. The same thing. So I'm gonna end this video right here. I hope you guys will take time and look on this and pass your challenge, get funded, and let me know what you think in the comment section. If you have any question or something you'd like me to elaborate or to cover, and see you on the next one. Bye.